What is up, everyone? My name is Ryan and you are watching Crypto Grinders. Crypto Grinders is an established channel focused on educating the masses anything and everything about investing and trading in cryptocurrencies and blockchain companies. So right now, I think it is one of those times where we need to start with our portfolio. And I think with a $1,000 price point, that's already good enough. You don't have to have tens of thousands, you don't have to have millions, but I'm gonna start you off with just $1,000. Now, why $1,000? Why not $10? Why not $100? Well, I think it's always good to start with some substantial amount of money, right? Because if you are gonna be starting really small, or at least too small, you won't take it seriously. So I think $1,000 is kind of like a very good starting point. So you must be wondering, okay, Ryan, but I may not even have $1,000. So there is episodes where I focus on how to get the money, right? I think getting the money is one thing that you have to sort out on your own. Now, obviously, you can either get that from your job or doing a side gig, right? You have to come up with some form of money if you plan to do investing, guys. And obviously, you don't necessarily have to depend on the crypto space to make money first, because you may not have the skill sets. You may not know exactly what to buy. So there are many ways that you can make money, and obviously you can try that by pulling off a side gig outside first. And maybe you have to work 2 jobs. I don't know, but you have to look at making the money first. From then, once you have the $1,000, you're probably wondering, what should I buy? I think I always have folks coming into my channel, or at least onto my Telegram, hey, I've got this amount of money, what should I buy? I think that's one of the most dangerous things, right? You just acquired the money from somewhere. Either you got a pay raise or you had a bonus. You have some surplus from money that you made from a client for your side gig. But I think the most important thing is just building up your portfolio from scratch. And I think the very first thing that you need to buy is obviously the only coin that I will only recommend is BTC. I think BTC is one of the most basic coins that you can afford to buy at the moment. Yes, you don't have to buy. The beauty about cryptocurrencies is that you can focus on fractionalized. You can invest in a fractionalized manner. What does that mean? It means that you do not need to buy one whole Bitcoin. You can buy fractions of it. So you could buy 0.001 Bitcoin, you can buy 0.001 Bitcoin, you can buy 0.01 Bitcoin. It doesn't matter, you can buy 0.1 Bitcoin. It's really entirely up to you and what is your comfort level. And eventually, once you start building up that portfolio, right, that is when you get involved. Because if you don't get involved in the market, right, whatever that's happening around you or whatever that's happening in this space, you have no skin in the game. I'm just stating facts. You need to have skin in the game, guys. So starting out this $1,000 portfolio, what is the benefits? Firstly, okay, you don't know let's assume you don't know the space. Okay, you don't have a game plan, you don't know the space, and right now, you feel that, okay, it has kind of bottomed. That's how maybe you feel, right? That the price of Bitcoin at the moment will not go any lower, or even if it does, right? What will you do? So there are a lot of things that happen in your mind, and with a small portfolio, right, you're not gonna be affected compared to someone who kind of put in way too much, or they bit off more than they can chew. So you don't want to be in that situation. So right now, I'm gonna just share with you the strategy, and then from then it's up to you whether you plan to execute or not. But at the end of the day, this episode is nothing to do with financial advice. It's just our personal opinion on how we plan to approach the market. So $1,000 is something that you're gonna start off with $1,000, because right now the volume of what you can buy on the exchanges is really small. So let me give you an example. Other than Bitcoin, okay, let's go into the order books. Okay, I'm gonna start getting a little bit technical relatively quickly. Why $1,000, right? I don't get it. I mean, well, Firstly, I'm not asking you to use $1,000 to buy Bitcoin. I'm going to be asking a question, a few questions, and then when you look at it, then you realize, okay, if you look at the order books, right, at the moment, if you look at the order books, you will notice that the orders are anywhere from less than 1 Bitcoin. Sure, there are certain orders that are a little bit bigger. Okay, anywhere from 4, 1, 5, 9, okay, at various price points. Okay, but you notice that the buying is not that much because right now we are in a bear market. So when we are in a bear market, not many people are interested to look into this space. Now this is Bitcoin, right? So if you look at the 24-hour volume, okay, not too bad. 77 million has transacted on this particular exchange alone. Now, if you were to look at any other type of cryptocurrency, okay, let's look at one other cryptocurrency. Let's say we talk about ADA, and you look at the volume. It's only 455,000, right? And it's not much, guys. It's not much. So, if you're someone who wants to buy big, my next question to you is, who's going to buy from you? Or who has enough to sell to you, right? And it takes a long time to fill up your order. This is just the way it is in crypto. There's no way at the moment that you can have a large amount of liquidity. So as an investor, even though you are someone who doesn't trade, you're not someone who buys and sells very regularly, okay, you still need to understand how the market functions. So when markets are doing really well, what happens is that you will see a huge influx of volume and the orders start to get larger. That's when you see a lot of liquidity. So what does that mean? It means that you look at the orders, you will see that the price is relatively close to each other. That way, you are going to have a very good selection of prices when you decide to buy. Not only do you have a nice amount of, you have a huge selection of prices, they are all relatively close to each other. That means the bid-offer spread. Now, the bid-offer spread just means that how much someone is planning to sell to you and how much you are willing to buy, right? That's the bid-offer spread, the buying and the selling rate, okay? The wider that spread is, okay, because of the lack of liquidity, the more you have to pay, unfortunately. And you know who earns? The exchanges. So lack of liquidity is a big deal. It is important. Now, you must be saying to yourself, if I'm an investor, I don't really care. I just want to get started. Sure, that's cool. You can approach it that way. You don't have to care about the little nitty-gritty, little commissions and slippages. You don't have to care about that. But what you need to care about is what happens when your portfolio grows. See, $1,000 in the space could actually do quite a lot because right now our market cap is only really small. Okay, right now our market cap is actually really tiny, and having a small market cap of about 120 billion. Okay, we are only at 120 billion in terms of our total market cap, and there's a potential that it could gradually grow over time. So this starting portfolio that you're having could actually grow to an amount that is more than what you can imagine, because right now there's quite a number of developments that are happening in the space that have yet to be uncovered by the masses. And the good thing is that you are watching this because this is a niche market. You think that a lot of people know about crypto. Actually, they don't. They are still very, very clueless about crypto. They don't even know what this space is all about. All they know is Bitcoin. But they don't know that there are more than 2,000 over types of cryptocurrencies and blockchain projects or companies that are out there creating the next best solution. So with $1,000, the recommendation, or at least we are looking at a very small set of cryptocurrencies, and this small set of cryptocurrencies can be anywhere from no more than 5 coins. Okay, no more than 5 coins that could be within the top 200 or outside of the 200. Okay, so there's a ranking, and then you can go to coin market cap. Okay, you can go to CoinMarketCap and then you can take a look. So CoinMarketCap basically is the like a website that has allowed us to kind of look at the various types of cryptocurrencies that are being listed at the moment. So there are a total of, at the moment, 2,068, as I mentioned, over 2,000. And this number is continuously growing. Now, will all of them survive? Definitely not. You're here to identify the cream of the crop. That's why you're watching the channel, because we are not here to give you tips and tricks. We are just basically covering potential projects that have the best chance of success in the space. Hence, the education part and knowledge part is very important. Even if you're starting out small, you still have to have the right knowledge. So apart from the knowledge and identifying which cryptocurrencies to buy, how much to buy? Well, since I already mentioned that if you are open to my suggestion of 5 coins, right, which I'm doing, you can practically every month you can look at spending, right, $200 per coin. That's just diversifying across various types of cryptocurrencies. Now, obviously, you could do $50 for the coin, $150 for some other coin, and maybe $300 for another coin. That's entirely up to you. Okay, it's more of how you plan out your portfolio to be. And you must be wondering, but Ryan, I've never done this before. Well, the question is, what kind of risk are you willing to take? I think the whole crypto space is still considered a high risk space. It's highly volatile. There are obviously people who have made a lot of money. There are also people who have lost a lot of money, right? I'm not going to be a YouTuber that's going to tell you exactly what to buy all the time. It's just very straightforward why anyone can talk about Bitcoin, or why anyone can recommend Bitcoin or talk about Bitcoin, because it's been around the longest, right? And when it's been around the longest, does it mean that you still can't lose money? That means, is it safe? No, it's not. The price changes almost every day, right? Bitcoin was at one point $20,000 and now it's at $3,600. So can you imagine that someone who bought at $20,000 would have lost a good 70, almost 80% of the value? Now that is pretty detrimental, even though the coin has been around for 10 years. Okay, but what is the space all about? Now, I think the space is currently all about the blockchain technology, where the focus is about decentralization, speed, and making sure that you can transact securely across the world, or at least across the networks in a decentralized manner. That means you do not need a middleman or a counterparty to monitor or process your transactions. The network does it for you. Now, a lot of companies are developing solutions on the blockchain. Whether or not they decide to have a token or not is irrelevant. Now, obviously, there are companies that believe that they want to create an ecosystem, and therefore they create their own tokens. And that is why we are now in this space where we're buying altcoins, and there are people recommending all the various types of cryptocurrencies. There are some companies that manage to successfully create a very solid ecosystem for the purpose of their token, and which is called the utility tokens. But this utility token has varying amounts of risks, and most of the time those risks can result in people making money or losing money. Now, the next thing that we want to highlight is that there is going to be a time when security tokens are going to be available. Whether or not this form takes place, and whether or not this is going to be called a security token, is yet to be determined. Maybe it's going to be called something else. But these tokens will then have a form of reward that is not a reward. We call it a return, an investment return that is attached to it, and that is why it's known as a security. So there are various laws and licenses and of course regulations that have been created around security tokens, because it's mimicking the old school stock exchanges. It's like basically a stock exchange 2.0. But with the STO space, there are opportunities that are available that were previously not available before. Let me explain. So with a security token, you are someone that let's say you are a private company and you want to have a certain financial arrangement with your private investors. In the past, most of all these arrangements are relatively closed doors, and there's no way that you can automate it properly. Everything is obviously engaging a lawyer, which is usually hefty fees. But right now, with a security token platform, you are able to you are now able to create your own tokens, structure the kind of financing that you want to do, and then you can create the name of your token, how many tokens are going to be available. Obviously, you still need to have a lawyer to help you out with certain aspects of this structure, but it's not going to be as expensive as compared to private equity financing. This is one example. Okay, so you're going to now be able to pay your private investors a form of dividend, or at least allocate a portion of your company within these tokens, and therefore that's why they're known as securities, because you are now attaching it to a monetary value or monetary gain, as opposed to the crypto space previously, when it was purely ICOs. A lot of these companies, right, they claim that they are not securities, but they're just rewarding people with tokens because they did something. Either they are holding an X amount of tokens in a particular wallet, or creating a node, or they are maybe doing certain kinds of activities, for example, creating content, or maybe just using the network. There are many ways that people are making money, and the only downside to it is that, will there be value, right? Can these companies maintain value for their own tokens? Because no point, right, giving people tokens and increasing the circulating supply when you can actually fractionalize it, because every single token comes from either the Bitcoin network or the Ethereum network, right? So you can already buy fractions of a token that is worth $1. You can already buy tokens that are worth $10, and you can fractionalize that. So when you have such an overwhelming circulating supply, that means there's too much. So when you see the circulating supply that you see here, it just means that there's so much in the market at the moment. And if one Bitcoin, you can split them up into 8 decimal places, right? There's a total of 8 decimal places when you buy a cryptocurrency. That means it's just such a small fraction that a lot of people can get involved. So this is kind of like why I feel $1,000 is really a lot already. And you don't want to be in the situation where, if you do decide to take profit and sell off, right, your profits, or lock in your profits, right, you don't want to be in a situation that you are going to get stuck, or you're going to be caught with an unfavorable price, right? That is the problem when you buy a lot. So at the start, you just have to start identifying all these key matrix or factors, and then start creating your portfolio. And should you approach it with one lump sum, or even do it monthly? Right now, I think doing a monthly contribution, and you do a dollar cost averaging strategy, and you stretch it across a certain time frame, that is going to be one of the best things that you can do at the moment, because that's what I'm doing. I'm not going to be putting in a lump sum, because I feel that there's going to be more volatility. There's potentially more downside before we see an upside. Although there's a lot of news that's happening, that's another thing that I want to cover. Although there's a lot of news that's happening out there, we don't know what news is real or what's not, right? We're just assuming that, we always take every single piece of news with a grain of salt. So we don't want to overcommit and overstretch ourselves. We want to enjoy the process of investing or trading in the space. Now, when it comes down to development, try to understand that developing a business, you need a number of years. There's no way that you could bring a product to the market in a very short span of time, especially when we're talking about the blockchain space. Although it may seem like a lot of big companies, I think recently JP Morgan wants to start off their own JP Morgan coin. whatever that means, right? Because they are already existingly having they are a bank, right, at the end of the day, and the purpose of the JP Morgan coin is for faster transfer and settlement. Okay, fine. That means they're trying to remove away fiat, because maintaining fiat in the bank, naturally it's liability in itself. And since everybody is moving towards a cashless society, it makes a lot of sense for one of the biggest banks in the world to create their own digital token. But what happens then? What happens to the existing cryptocurrency? I think it doesn't matter, because right now it's just a different ecosystem. The cryptocurrencies that we know now will eventually develop and have their own ecosystems built around it. Will there be more merchants that will be more open to using cryptocurrencies in the future if there are systems in the back end that are able to help these merchants facilitate and receive payment? Definitely. Why would I limit myself to just one currency? If I can accept multiple currencies from different customers from around the world, whether they're visiting my store, that means either I have a retail shop, or they are visiting my store online, it doesn't matter. I should not restrict them from the freedom of paying with what they want to pay with. And that's what cryptocurrency does. I don't have to ask for the approval from a bank. I don't have to ask the approval from my payment processor to accept the payment. If I have a digital wallet that accepts Bitcoin, and this particular customer accepts that has Bitcoin, wants to pay me in Bitcoin, I can immediately accept it, right? And that's how this whole space will work. It's going to allow me not to give a cut of my commission or give a cut of my hard-earned money away, right? So it's very powerful, guys, right now at this point of time. But will it require more time? Definitely more time than a lot of people imagine. We're talking about 3 to 5 years, even 10 years down the road. This is still going to be in development. So, starting out with a small portfolio doesn't sound so bad after all. So if you think that you are going to miss out on the next bull run or whatever, no, you're not. In fact, I think the bull run is gradually coming. It's gradually coming. I don't know when it'll happen, but I think the most important thing is that this is a developing space. It's here to stay. There's a lot of money that's being poured into this space, and you can really see those developments happening on almost a day-to-day basis from different companies. So the good thing is that start small, right? Understand your risks, do your own research, and at the end of the day, just make sure that you are going to stick the course. Okay, you're going to stick the course, you're not going to give up halfway, and you're going to continue to learn as much as you can from our channel. All right, so don't forget to click the like button, don't forget to give this video a like button, and don't forget to subscribe and click on the notification bell so that you do not miss the next episode of this live stream. See you guys.